10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Hello and welcome. You are with the earnings press conference for Tata Consultancy Services. We're here to talk about our fourth quarter FY25 results. Without further ado, I'm going to introduce the management. We have with us K. Krithivasan, MD and CEO, our CFO, Samir Siksaria, and our CHRO, Milind Lakkar. We are live on all social media platforms and we have our friends from the media over here. So we're going to start with a CEO address and then followed by questions. Krithi, the floor is yours.
Thank you, Kritika. Good evening, everyone. So we closed the financial year with our revenue exceeding $30 billion in USD. In Q4, our revenue grew by 2.5% year on year and degrew by 0.8% on a sequential basis. Our rupee revenue grew by 5.3% year on year to reach 64,479 crores. Our operating margin for Q4 stands at 24.2%, representing a contraction of 30 bips over Q3. This translates to 15,601 crores of operating profit. Our net margin for the quarter has come in at 19%, translating to 12,224 crores. Our EPS reached 33.79 per share. Cash from operations at 15,294 crores, representing a strong conversion of 125.1% of net profit. We had spoken about the improving market sentiments and early signs of discretionary spend revival in January. But as you know, this was not sustained due to many of the discussions around tariff. We are observing delays in decision making and project starting with respect to discretionary investments. Despite this, all our major geographies exhibited growth on a sequential basis. On a sequential basis, North America and UK grew by 0.2% and Europe grew by 1.2%. New growth markets of Asia Pacific and Middle East and Africa also grew positively this quarter. After many consecutive quarters of strong growth, India experienced a degrowth of 13.2% in this quarter. Among the verticals on a sequential basis, BFSI grew by 1.3% and energy resources and utilities grew by 1.1%. Our communications and media and tech services business also experienced marginal growth. However, our consumer business degrew by 0.7% and life sciences and healthcare degrew by 0.8%. Manufacturing degrew marginally by 0.1%. TCS banks and products and platform continued their growth momentum. Our customer metrics continue to remain resilient. The number of customers from whom we make more than 100 million rose by 2 to 64 customers on a year-on-year basis. In addition, our customer base of 1 million stands at 1,332, an increase of 38 over last year. We had a very strong order book closure again this quarter. Our order book closure for the quarter stands at $12.2 billion. This is the second highest quarterly order book and does not include any mega deals. Our order book for North America stood at $6.8 billion, for BFSI at $4 billion and consumer business at $1.7 billion. Most geographies and business groups had strong order book closures. By the end of Q4, our net employee count stood at 607,979, a net increase of 625 associates. Our IT services attrition stood at 13.3%. We are seeing significant traction for GenAI and Agentic AI services and solutions across industries and markets. Over 580 AI for business engagements were delivered or in flight during this quarter. We are investing in Agentic AI form with 150 plus solutions across finance and accounting, supply chain, sourcing and procurement, HR and customer experience to enable customers in their journey towards autonomous GBS. We also enhanced our Wisdom Next 2.0 platform to offer agentic capabilities. The new features will enable faster onboarding, centralized governance, enhanced security guardrails, and a wide spectrum of pluggable solutions to accelerate innovation. For a global financial services major, we are using a combination of GenAI and TCS Mastercraft to migrate over 50 million lines of COBOL code to Java. In Q4, we applied for 267 patents and were granted 235 patents. Coming to full year commentary, our revenue for FY25 stands at 255,324 crores, 2,55,324 crores, representing a rupee growth of 6% and USD growth of 3.8%. On a constant currency basis, we grew by 4.2% in FY24 compared to 3.4% in FY24. Our operating for the year is 62,165 crores at a full year operating margin of 24.3%. Our net profit for FY25 is at INR 48,533 crores at a net margin of 19% and a full year EPS of INR 134.19. Cash from operations stands at INR 51,426 crores, which is 105.9% of the net profit. For full year, UK grew by 4%, Europe was flattish at 0.7% and North America degrew by 1.8%. India grew by 62.6%, LATAM by 6%, APAC by 6.8% and MEA grew by 11.2%. Among the verticals, banking grew by 0.7%, consumer business by 0.3%, manufacturing by 2.9% and energy, resources and utilities grew by 5.1%. In FY25, life sciences degrew by 1.6%, technology services by 1.3% and comms by 9.5%. The board has proposed a final dividend of Rs 30, bringing the total dividend for the year to Rs 126 per share. As all of you would have noticed, we also announced the appointment of Ms. Aarti Subramanian as the President and Chief Operating Officer and Mr. Mangesh Sathe as the Chief Strategy Officer. Both are well-known industry veterans and bring immense expertise on helping businesses adopt new technology and consulting. We welcome Aarti and Mangesh into the TCS family. With that, I hand it back to Kritika and we'll open it up for questions. Back to you, Kritika.
Thank you, Kriti. We'll start, as always, Reema Tendulkar from CNBC TV 18.
Gentlemen, good evening. So Kriti, first question is for Q4 and FY25, if you could just tell us what was the growth X of BSNL, could you put that into numbers? FY26, how will it compare versus FY25? And also, given the macro uncertainty, are we seeing deal cancellations, ramp downs or pauses? If yes, what's the extent of it and in which sectors? Samir, if you could explain the margin performance, 24.2 versus 26% on a year-on-year basis. That's a sharp decline. And next year, do you think margins, you can do better given the low margin deal BSNL ramps down? And Milind, on wage hikes and hiring. Thank you.
Reema, as I mentioned, overall, while we had a degrowth of 0.8% on a sequential basis, all the major markets grew. Most of the industry verticals grew. Our international business had a positive growth. Okay. I will not be able to call out what is the extent of BSNL degrowth here. What would be international business growth?
So international will be approximately sequentially, right? 0.6%.
0.6%. Okay. On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. Okay. On the business, overall business environment, while till February we were quite positive and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March and resulting in some project delays, some decision making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time. And as I said, we believe that maybe over the course of next few months, this uncertainty should settle in, and we should be back to business.
So, Rima, from a Q4 to Q4 margin perspective, I think TCS was the only company who probably gave a full cycle of increments and also did merit-based interventions regularly through the period. That, as well as combined with investments in capability building, in our infrastructure expansion further, is the overall impact which we are seeing. Sequential basis, the margin impact was 30 basis points. Also on merit-based interventions or tactical interventions which were done through this quarter sequentially. You asked about FY26, absolutely. So first, our overall guidance range, or the guidance beacon which we call it, still remains at 26 to 28%. There is a gap, and given the current environment, there might be some impact on the operating leverage, maybe because of utilization taking a impact. But overall, the operational levers which we have been talking about, whether it is in terms of pyramid, utilization and productivity, still remain, and we believe that should enable us to get through. Also, uncertainty provides an opportunity, and we'll use this opportunity from a cost optimization perspective as well.
Can you explain the tactical interventions on margins?
Sequentially, the tactical interventions were about 100 basis points.
And what were they?
They were mainly linked to promotions, merit-based promotions.
Rima, the hiring, we have onboarded 42,000 trainees in FY25, and FY26 number will be similar or little higher. Regarding wage hikes, considering the uncertain business environment, we'll decide during the year when to make that happen.
Thank you. Next question from Sajid Mangat, NDTV Profit.
Hi, Kriti. Give us a sense of the discretionary spend environment, because when we spoke in January, you spoke about being optimistic about that. As we sit in April, and the kind of global turmoil which is happening with respect to trade, and as a result of it, the derivative impact which is happening on IT and IT services, how do you see discretionary spend moving from here on? Samir, on the BSNL front, now that it's getting ramped down, what could have been the margin impact on your balance sheet of FY25 because of BSNL? I'm talking about, had BSNL not been there, the margin could have been higher by how many bips, or, and because of BSNL, it came down by how much? And Samir, on a year-to-year basis, the numbers are almost the same, 6.01, now 6.07 lakh employees on a headcount basis. Is that the level that you will be maintaining, despite the fact that you're mentioning that you will take 40,000 or 40,000 plus employees in FY26?
So, Sajid, given the fact that this uncertainty people started experiencing towards late February, March, if you look at our order book, okay, the discretionary spend versus non-discretionary compares quite well with Q3. But what we are seeing from the market, I would expect there would be delays in decision making on discretionary spend if this uncertainty continues. But of course, say with yesterday's announcement, we need to see, does it bring in more optimism into the market and makes the decision making cycle faster, or at least normal. See, usually in these kind of situations, many of the customers also try to do more cost optimization programs, so that definitely provides opportunity. Like even in Q4, there's been a good mix of programs around operating model transformation, vendor consolidation, technology transformation. I do expect that it will provide us opportunity for gaining further market share.
So typically we don't call out customer specific, excluding margins or what are our margins on a specific customer.
My point was, is there a bump up in margin that's expected now that?
Yes, we have been calling out. So if you do the maths on the third-party expenses which we have, and the cost of equipment and software, you'll be able to calculate it. And like we have been calling out the impact in the prior quarters, yes, you would expect as a specific large transformational project ramps down, there should be unwinding of that impact.
Sajit, hiring from the campus is strategic for us. We will continue to hire. I said this earlier and I'll say it again that our numbers will be similar to what I did earlier or better. With respect to net addition, it really depends on the overall business environment and what we eventually hire from the market, depending on the skill requirements in every quarter. So,
13.3% attrition is slightly higher than Q3 on an LTM basis.
So-
Is that a worry for you, or is there a market dynamic changing because of which it's reaching up, or is it based?
it is not a worry. It is not a worry purely for one reason that our quarterly annualized attrition has come down by almost 130 basis points this quarter.
Thank you. Next question from Shivani Shinde, Business Standard.
Hi, good evening, gentlemen. Kriti, first question to you. You obviously sounded off the US tariff cautiousness in your. Are there certain verticals that we should, see which will bear the brunt of these tariffs? Are you already seeing that when you say, there have been delays or clients are getting, pausing the discussions? And if that's so, which are these verticals that you're seeing? Two, question where Milind can also join in. Two significant announcements in management. The last time TCS had a COO was when N. Chandrasekaran was appointed, and then, of course, I'm going back. I know, I'm sorry, but COO is a significantly important position. So just want to understand for the, Ms. Aarti Subramaniam's appointment to that role. To Samir, two questions. CAPEX for next year. Do you see any impact because of tariffs? Do you see in terms of your expansion plans that TCS has? Milind, you are saying you will take a call on wage hikes. Is that should we think that because of this uncertainty, there may be certain delays? Thanks.
Shivani, first from the vertical perspective, as to be expected, like as the uncertainty crept in, some industries, you also saw the US consumer confidence index going down. So the impacted businesses tend to be in the consumer retail sector. Retail has been impacted to some extent, and when I say retail, CPG, and also travel, hospitality, that's probably the most impacted sector. And another sector that's been impacted is auto, like because of the tariffs that have been imposed on the auto sector. So I see the maximum impact in these two sectors. Other than auto, manufacturing seems to be still okay. We are banking, financial services seem to be okay. Insurance, there is some softness, but BFS still continues to, the demand environment continues to be good, which is giving us also the hope and confidence for the future. Comms is something that we need to watch out for. Coming to COO announcement. So first, after N. Chandrasekaran, NGS was also the COO. He left only 1 year ago. Okay. See, what we were part of doing our strategy exercise on what are the areas of focus. When we did that, we realized that as there is a significant technology transformation happening, there are a lot of areas where we need continued focus to build talent, build partnership, and hire more, gain more, strengthen the talent pool available, because some of the talent pool we cannot depend only on homegrown talent in these new technologies. So we thought that there is a lot of focused activity required to drive growth and sustain the leadership in these new technologies, and therefore by that extension drive our strategy. So then we were looking at what are the leadership options and bandwidth available. We realized that it's important that we add to the bandwidth of leadership that's already available with us. Aarti knows, I know that how many of you know, Aarti was with TCS before. She knows TCS quite well. She's been part of the TCS board. Also at the same time, being part as a chief digital officer of Tata Group, she has extensive experience in how the businesses run and how businesses adopt technology. So we thought it would be most appropriate for us to have someone like her as a COO, and the Tata Group has been kind enough to let us have her with us. So that's a background.
Shivani.
Go ahead.
Sorry. Shivani, yes, I think because of the uncertain environment, we will decide on the wage hikes during the year. It can be anytime, but it will really depend on the environment.
Question on capex. If you look at this year, our capex was significantly higher than the previous year. We did approximately 5,000 crores in capex compared to about 2,700 in the previous year. In terms of investments continuing into the next year, we don't plan to scale it down. Investments in talent, in innovation, infrastructure, or partnerships. Currently, there are no plans to scale any of them down.
Next question from Ankur Mishra, ET Now.
Wanted to understand from you your presence in North America, which you talk about over year-on-year basis. From about 50%, it has come down to 48% or so. I want to understand what is your strategy further. Do you plan to continue to maintain this kind of geographical presence, meaning the focus on North America? Is there a rethink on that? And how has been the quarter, particularly in terms of performance from that region? You have mentioned, Samir, about 26 to 28% margins. But is there any timeline you see, when you are going to achieve that, and what gives you confidence for that? Milind, I want to understand from you the attrition rate. Are you comfortable with that, or you see it as a challenging thing?
So Ankur, from a North America perspective, it will be a main geography, almost like a home market for us, a foreseeable future. Okay, because there are large enterprises that invest in technology a lot, and we find there's greater opportunity for us to participate in those technology transformation. For the quarter, we did grow marginally, but 0.2% on a Q-on-Q basis. As I said, all major markets grew for us. What you see as going down to 48% is to some extent India geography also having significant growth. So because of that, you find some market share move from North America to the rest of the world. So that's a shrinkage, but I don't think otherwise our focus on North America will continue.
And given the overall certainty which currently prevails and the dynamic nature in which things are changing, it's difficult to give a timeline in terms of when. We have executed it in the past, so we are well confident in terms of how we can achieve it. What gives us confidence in terms of are the levers which you talked about, the operational levers, whether it is in terms of productivity or realization, going for a better pyramid mix, or the improvement in revenue mix also can help.
Ankur, attrition has inched up a bit from 13 to 13.3 in this quarter. But we are okay because our quarterly annualized attrition has come down this quarter by 130 basis points. So we should be okay.
Dibangana Ghosh from Money Control.
Hello. Kriti, my question to you, wanted to understand how is the impact of AI playing out in the discretionary spending part? Because in the industry, we have started hearing that companies are trying to provide productivity gains to the customers. And also the deal tenure and deal sizes are coming down. So wanted to get a bit of understanding on how it is playing out for TCS. Samir, on the basis of that, will passing on productivity gains from AI impact the margins in the short term? And Milind wanted to understand, there were some reports on the TCS considering wage hikes in single digits of 4 to 8% or so. So if you could comment on that.
Sure. Debangana, AI plays out in two ways, right? There are projects which we call AI for business. These are all transformation projects. In fact, for one of our large clients, recently we did a project where they are in the movie making business. We are able to use AI to read the script, find out which are those scenes where are dangerous, where you need special license to take, which are the scripts where the property branding could be enhanced. So there are a lot of opportunities in AI which previously you would have done in a manual way, and maybe have taken more time, and maybe may not have been accurate. So it creates two sets of projects: AI for business, as we call it, and then AI for IT, which are primarily software engineering projects. So the deflation in productivity is because it's AI for business is mostly a net new opportunity. This is AI for IT, where there is a productivity gain comes in. So we try to, whatever projects we do, whether it's a maintenance program or it's a new development, we try to infuse AI as much as possible. And if there are any productivity gains, depend, because each the kind of productivity gain you get will vary based on the technology and based on the platform in which you are using it. So we do share those benefits with our customers, and there are if it becomes if you have to give a productivity gain, we do give the gain to the customers as well. But overall, we find net because there is a significant amount of, as I said, AI for business projects also coming in. We believe net there won't be a overall reduction in the volume of work that's being done.
Your question on in the short term, will there be a margin impact? There won't be, because one, the investments which are being done are already carrying on. Second, in terms of directly linked to the productivity question, it is about sharing gains which are realized. So there also there won't be any impact.
We did not at least observe this in a significant way this quarter of the deal duration coming down.
Devangana, I think I responded to Vijay's already with respect to the fact that due to uncertain environment, we will decide during the year when that's going to happen, and the quantum of it also we will decide at that time only.
Ekta Suri from Z Business.
कृति, मैं आपसे पूछना चाहूँगी कि आपने बोला कि 30 बिलियन का आपने जो रेवेन्यू क्रॉस किया है, तो क्या हम FY26 में आप देख रहे हैं कि क्लाइंट्स आपको लॉन्ग टर्म कमिटमेंट दे रहे हैं, और जिस तरह से AI की डिमांड बढ़ रही है, सो हाउ इज TCS प्लानिंग टू बी अ लिटिल डिफरेंट, एडिंग मोर वैल्यू टू द बिजनेस? समीर, आपसे पूछना चाहूँगी, ऑपरेटिंग मार्जिन थोड़ा सा गिरा है, ये क्या ग्लोबल इश्यूज जो चल रहे हैं, टैरिफ वॉर्स तो अभी शुरू हुए हैं, आप कहाँ पर प्रेशर देख रहे हैं? डील साइज में फ़र्क आ रहा है, या फिर कहाँ पर आप कॉस्ट बढ़ती देख रहे हैं? समीर, आपसे पूछना चाहेंगे कि आपने अपनी एम्प्लॉयज़ को भी AI में ट्रेन किया, और AI की डिमांड बहुत बढ़ी है, तो क्या हम FY26 में ये इम्पैक्ट देख सकते हैं कि आप न्यू हायरिंग की बजाय आप अपने जो आपने टैलेंट जो ब्रश किया है उसी का ज़्यादा इस्तेमाल करें, और वो कहीं हायरिंग पे इम्पैक्ट होगा उसका?
So Ekta, on a deal, long-term commitment from our customers, one way to look at it is what is the length of duration of the deals. As we mentioned, the deal duration hasn't changed, and as we mentioned, the TCV that we signed this quarter, even without any mega deals, is probably the second highest for us, right? It's a 12.2 billion. The previous high had a significant portion of mega deals in it. So we are not seeing any reduction or reduced commitment from our customer. In fact, the engagements are only stronger. And in fact, it relates to our second question, because how do we bring value to our customers through AI? So that is actually what is increasing the commitment and engagement with our customers. Each one of our business groups looking at the value chain of their customers' industry segment, looking at what are the opportunities where AI can bring them immediate value, or where you can in fact disrupt the value chain, bring more sustained value. So that's what our teams go back to customer with. That's where we differentiate ourselves, helping them leverage the technology investment they have made and getting the business benefit. And we are very confident that we'll be able to deliver more value to them through AI.
So your question on whether the slight drop in margin was due to current macro getting impacted, as I explained earlier, it is more linked to the investments which you made, the tactical interventions which I talked about, and some part of it is on higher elevated expenses in this quarter, which was linked to either purpose-driven initiatives on CSR or higher travel or marketing-linked events. So not directly linked to anything on how the macro is turning out in the past couple of weeks. Do we see cost escalation? I think I mentioned about one part. In an environment where things are uncertain, our operating leverage gets impacted a bit because you might have to carry higher bench or the utilization gets impacted.
एकता हायरिंग का इम्पैक्ट एआई के कारण इसको एक बार जैसे कृति ने बताया आपको कि एआई फॉर बिजनेस यह एकदम नई अपॉर्चुनिटी है, तो उसके लिए नए लोग, नए एडिशनल पीपल वी विल नीड. एआई फॉर आईटी का कितना इम्पैक्ट होगा अभी टू अर्ली टू से, बट हमारा ऐसा मानना है कि जैसे आगे बढ़ेंगे तो यस, जैसे कृति ने कहा कि प्रोडक्टिविटी देंगे हम, लेकिन we'll do more work, we'll deliver more work for our customers, we'll need more same or more number of people to deliver that work. So I don't see an impact on hiring because of AI.
Thank you. Varun Sood from Mint.
Hi gentlemen. So the first question, has the BSNL deal ended in the March quarter?
It ended. It's successfully going towards completion. Not yet ended. It should end. The initial contract should end in Q1.
In Q1. So the second question, you mentioned 94% of your international, that is your international business grew 0.6% sequentially.
Mm-hmm.
So that means almost about 94% of your business. 6% is India. So was the slowdown in BSNL so much that your net sequential decline was almost 1%? Would that be a right way to look at the number?
Looking at it.
Just a clarification.
So we are not calling out client-specific ones, but if you do the calculations, that would come to approximately that ballpark.
So Kriti, you mentioned that late February, early March was when this uncertainty started. But this quarter, again, it won't reflect truly on your performance because 1 month's uncertainty should not really impact your overall growth in Q4 and for the fiscal year. So I'm just trying to understand, is it just that the BSNL deal, the ramp downs happened and full year revenue decline is almost, full year growth is almost the slowest in 4 years? Are there more such ramp downs? Is there some client, what should we say, the leaking bucket theory, where you're losing some of your clients?
Varun, first of all, factually, you are not correct. So if you look at FY24, we grew actually better than FY24 and FY25.
FY24 was 4.1%.
4.1%.
FY24 was 3.4% or something. FY22 is 4.2%. FY25 is 4.2%.
FY25 is 3.8%.
No.
You are looking at dollar numbers probably. We are talking
correct.
about the constant currency numbers.
CC numbers.
There is significant cross-currency relation. We have published the CC numbers as well.
So,
Thank you.
Otherwise, see, if he said, if you had not taken it without BSNL, if you had that had added to our overall growth, probably we had with this 0.8 without BSNL being neutral, we will be in the 0.6, 0.7 kind of territory positive. There was, as I said, some amount of project deferral that happened in March, that uncertainty. So we were hoping that we will be sub 1%, I'm sorry, higher than 1% when we were in the early part of the quarter, like it came down. So, but what we were primarily looking at is are all business verticals growing and all major markets growing. And that was the most important thing for us, which we are quite accepting consumer business and life sciences and healthcare and manufacturing marginally, but all markets grew and we had growth coming in business verticals. So we are, on a whole, given the situation, we are quite comfortable with where we are. I don't think, as I said, there are no significant ramp downs elsewhere, and there are no significant cancellations elsewhere. So we are comfortable with where we are given the overall situation.
So just two last questions. Considering this uncertainty, macroeconomic uncertainty, one would believe there is every likelihood that this 39.4 billion order book which you have, some of those projects may get deferred, may get delayed. And some of your current accounts, those ramp downs which are happening, God forbid, but they could also become pretty big. So when you are saying that FY26 will be better than FY25, is this more a hope, or do you have a visibility that FY26 indeed will be better than FY25? Thank you.
Varun, the only visibility is the order book. Okay, whether you want to call it hope or aspiration, it's for you to guess. I am giving you the facts that I have. The facts are my order book. Based on the order book, based on the discussions I have been having with our customer, we are saying that we believe FY26 will be better than FY25. If our assumptions go wrong, then you will be right.
I don't want to be.
Yeah.
One last question, sir. This 39.4 billion TCV, any visibility or any color which you can share that say 50% of this is within 5 years? Because this, I would like to believe, includes both your renewals and your new order. Can you share any number of say 30% or 40% of this order book will be translated to the revenue within 2 or 5 years? Because it gives much better understanding how your order book is translating to revenue. Thank you.
Varun, we have not been sharing that information, but what I can assure you is the average deal tenure. Okay, weighted the average deal tenure has not shifted significantly compared to previous quarter.
Thank you, Varun. Ashish Aghashe from PTI.
So many times in this press conference, just wanted to broadly know how do you play this, and when you say that FY26 would be better than FY25, is it the result of the 90-day breather which you have probably gotten, or would that comment have been different had it been 48 hours before have we met? That's for one. And secondly, sir, has there been any change on the infra creation front as well? Last 3 months we have seen 2 announcements towards this. CapEx is also up in FY25. So are you building more rather than sort of leasing? Is that a preference at the company?
Ashish, all of you mentioned uncertainty as many times as I mentioned. So I don't. The point is, my belief, right? No region will want to live with this uncertainty for a very long period of time. Or maybe over a period of, that's what I believe. Near term, some certainty will emerge, and we'll all know where this trade policies regime would take us forward. And once that there is some sort of clarity on that, businesses take decisions whether they are towards more cost optimization, more discretionary projects. Those decisions will be taken, but most important thing is some decisions will be taken. We also believe that most organizations have to go through technology transformation because they have deferred significant technology transformation for too long. Third is our order book. So based on this is what we can comment. We believe that when I say FY26 would be better, it's based on these factors. More importantly, like important assumption I am making is this uncertainty will be short-lived.
On the infrastructure. Okay. Why are businesses ordering at all?
Ordering?
You are reporting the second biggest number on the TCV. So why are they ordering at all? In the sense that, or is it so that this number does not capture any activity in March? There was
no. It does. I said there's no major panic that's set in the market. Some places there's a deferral. But it's not that it's all come to a stop. Like we have been winning large deals across. In fact, our North America order book also is one of the highest, I think, right?
Yes.
It's one of the highest. So customers are taking decisions towards cost optimization. There are some decisions still taken towards a discretionary spend. Like I did say, there is uncertainty because there is a reduction. Maybe you can look at if without the uncertainty, our order book could have been even better. That's the way I would look at it.
Sure. See, typically in any city which we operate in, we have a balance of lease and owned facility. And if you look at the two announcements which you talked about, one is currently a lease with an option to buy at a later date, and the land acquisition which we talked about is a thing where we have bought the land and we will be building up capacity over the next 3 years. There is no change in from an intra decision perspective.
Thank you, Ashish. Next question from Himanshi from the Economic Times.
So I want to ask about, and I know you've also already answered about it, but BFSI in the Americas, are you seeing deal momentum slowing down there? Could you elaborate a little bit? Also, Milind sir, is there a visibility on the upcoming quarters, especially the next 90 days? There's a lot of uncertainty. Any visibility on headcount growth in the upcoming quarter?
So BFSI in general, and particularly in North America, I still find the growth has been good in Q4 as well. And globally also what we declared is a good growth compared to most other business verticals. And the deal momentum is also continuing to be robust for us in BFSI North America. Only segment where we find some softness could be insurance, but rest of it's been quite robust.
Himanshi, as I said, we continue to hire from the campus, and similar or little larger number than what we had last year. That will continue. What happens next quarter, what is the net headcount increase, depends on many other factors, which will be dependent on the business environment we are in right now.
Next question from Lalatendu Mishra from The Hindu.
Good evening, gentlemen. My question is about the trade war, the noisy trade war that is happening. The certainty that is emerged from last night is that 90 days of pause on 75 countries, and the trade war between America and China has intensified, the two biggest economies. As a company, how do you read it? Thank you.
Lalatendu, my job is to read what my customers tell me. I don't want to. I'm not going to read any macro picture and then arrive at. Like our approach has always been stay close to our customers and understand what would be good for our customers in a given point in time. And so sometimes they do more cost optimization programs. Sometimes they do more transformation. They want to leverage technology to provide benefit to them. So that's our approach has always been, like staying close to our customers and developing our offerings to meet the requirements. So I'm not too worried. I shouldn't, because it's not in my control. So I worry about what I can do.
So the stance remains the same.
Absolutely.
Thank you.
Next question from Urvi Malvania from Financial Express.
Hi, good evening. Two questions, Kriti. One is you've mentioned the mega deals order book is the second highest ever.
Order book is very good without any mega deals in that.
So basically, if you can give some color on which deal segment you're seeing most traction, and if some color on how much Gen AI adoption by clients is driving the order book. And second is where you're seeing the deal ramp down. You said it's not major, but then again, in what segment it's happening, and are Gen AI based deals also getting affected?
See, first on the deal segment, like what we publish is North America. I gave you North America is about 6.8 billion, and BFSI is 4, and CBG, the retail business group, is 1.7 billion. Okay, and all of them are quite strong compared to the historical performance. And for the things that we don't publish also, most segments have had a very strong deal growth. And Gen AI, as I explained, like we look at both from AI for business and AI for IT. We find strong traction and increasing traction in AI. There are no deal cancellations coming in AI. It is actually driving our growth, one of the key factors driving our growth and driving the order book.
Thank you. And Milind, one question for you. Last time also we discussed the upskilling aspect. Now there's some margin pressure that you're seeing or anticipating given uncertainty. Do you see any that affecting the way you look at upskilling, especially with the new trainees on board?
Urvi, we never look at it that way. Like I said, campus hiring and overall internal development of our associates, whether coming from the campus, coming from the market, or basically have been here for a long time, that is a strategic investment we make, irrespective of the market situation, and that continues.
Next question from Valerie from Hindu Business Line. Okay. We'll actually move on now to Haripriya Suresh, who is joining us from Bangalore. She's joining us online. So, Haripriya, you can unmute yourself and ask your question. Haripriya, can you hear us? Oh, I believe Sai is joining from Reuters instead. We just got a message from Sai. Sai, if you can hear us, can you unmute yourself and ask your question?
Hi. Hi. Yes. So one question to Kriti and one question to Milind. Kriti, you said that the uncertainty you expected to die down in the next few months, right? So can we assume that probably this, whatever the client issues and all is, short term, and the long term, you expect, from Q3 onwards, probably after the 90-day period, you expect some sort of stability. So because it sends, my second question is related to that, because you're kind of sending mixed signals, because you're saying FY26 would be better than FY25. So, and there's also an added part of, delayed wage hikes. So I'm sure, like, in terms of employee morality and probably in terms of attrition, that could have an effect. So can you just tell us, like, when do you see a certainty, at least like from your client's perspective, and in terms of the attrition, do you see it climbing up because of the decision on wage hikes? Thank you.
I said I expect or hope, certainty to set in probably in the medium term. And I am not, because this is not in my hand, right? Like, for me to comment on when there will be more certainty, because it depends on so many global factors. And the decision that we have taken on wage hike is once we have a clarity. So we don't want to put a timeline on ourselves saying that when we would announce. But we said once we have a clarity, we will announce the wage hike. Milind, you may want to add.
I think you kind of cleared that already. I think the only point I will add is, we continue to communicate with our people and continue to, explain the overall situation, and a lot of our people basically do understand this, and it has happened in the past in certain quarters, and we actually got a very good response in the past as well. So I don't expect any significant changes in attrition or anything on the workforce front because of this uncertain situation.
Thank you. We're going to take a last question from Anjana from The Informist.
Hi, thank you. My first question is about concerns about visa policies in the US. Since there are a lot of uncertainty in US policies, what are your expectations? By any chance, do you have any strategy in place to deal with a possible shock if anything comes up, particularly about H-1B visas? Second is about, we have been seeing a lot of traction in AI in Singapore, particularly AI boom in Singapore. So your other industry peers in the US like Google, Microsoft, Nvidia have also been shifting their focus to Singapore as well. So are you also planning to focus more in Singapore while also continuing to focus in US operations? Thank you.
Anjana, with respect to the visa issue, I think as I said it earlier, we actually have a global model. We have workforce globally and obviously including in the US, a significant workforce where we hire locally, where people obviously go on a visa from here. So while we do have visas issued this year as well, but our overall business environment is something which is the overall business model which we have, which is a global one, does not really depend on this specific factor on H1 visas.
On AI, see, we have a very significant presence in Singapore already. We work with multiple clients there, and regarding AI, we look at wherever talent's available, because nowadays this is a very niche and new area where we can acquire as much talent as possible. So we are focused on wherever we can add to our talent pool. We look at it it could be Singapore definitely is one option for us. But we look at multiple regions where we can acquire AI talent.
All right. Thank you to everyone that's joining us on the live stream. Thanks to all the journalists that are here in person. We understand that it's a market holiday in India, so we really appreciate all of you taking out the time for us. Please join us for refreshments after this, and to everyone watching online, thank you and have a nice evening.